Hello everyone, welcome to October Real Estate Market Update. Calgary's market is shifting this fall. Listings are building, selection is back, and prices are easing from spring highs. If you're buying, leverage is improving. If you're selling, precision wins. Let's break down the latest numbers and what they mean for October. Welcome back to October Real Estate Market Update. I'm yours, Markovic, Calgary and area Realtor. Let's start with micro snapshot. What changed in September? In September, Calgary recorded 1,720 sales against 3,782 new listings. That wasn't enough demand to absorb supply, so inventory climbed to 6,916 homes. That is 36% higher than the last year and over 70% higher than what we typically see in September. The sales to new listing ratio landed near 45%, and the months of supply pushed to 4 for the first time since early 2020. CREB's chief economist Lurie puts it plainly. Supply levels have been rising in resale, new home and rental markets, while demand is slowing on softer population growth and general uncertainty. With more choice and cooler demand, the sense of urgency eases and prices feel pressure. If this pattern persists, conditions can lean more in favor of buyers. That said, it varies by property type, price ranges and location. Let's take a quick look at definitions so we are on the same page. Sales to new listing ratio around 45% signals balanced to buyers leaning market. Months of supply near 4 means there is about 4 months of inventory at the current sales pace. Higher months of supply usually means more negotiation room for buyers. Now let's take a look at price level and momentum. Citywide benchmark price sits around $572,800. That is down about 4% year over year and slightly lower than August. With supply building and urgency cooling, prices has adjusted from the spring peak. If months of supply hovers near 4 through October, expect continued modest price pressure in higher supply segments, while tighter pockets will hold up better. Now we're going to take a deep dive into each individual segment and find where the leverage sits. Let's start with Detached. Detached remained comparatively resilient. September posted 859 sales and 1,905 new listings with months of supply at 3.73. The benchmark price is $749,900, about 1% lower than the last year. Most of the detached price adjustments are concentrated in the Northeast and North District. Well, what it means? Well, still more balanced than apartments, but not as tight as the last year. Now, semi-detached. Semi-detached is the steadiest performer. 156 sales, 361 new listings, and months of supply at 3.96, and a benchmark of 684,800, up roughly 1% over the last year. This category shifted to balanced conditions later than the others, which helped support pricing. Raw homes have seen one of the largest boosts in supply versus long-term trends. 304 sales, 592 new listings, and months of supply of 3.62, and the benchmark price of $437,100, down for about 4.8% year over year. More selection equals more price sensitivity. Buyers get choice, and sellers need sharper pricing and better presentation. And last, apartments. Apartments moved the most. 401 sales, 924 new listings, and inventory is 1,999, and months of supply at 4.99. That is buyer's market territory. The benchmark is $322,900, down for about 6.4% year over year. Added rental and resale supply is pulling urgency down, which is why this segment shows the clearest price adjustments. Now, let's take a look at district specifics that matter now. In detached segment, West District, months of supply about 2.98, with the benchmark near $968,500. Still tighter than city average, which supports pricing. Southeast detached months of supply is about 3.07, with the benchmark near $710,300. Balanced leaning with manageable competition. Northeast and East detached segment is where the most of a detached price givebacks occurred. Buyers can find value and sellers must be precise on price and condition. For the apartment segment, Southeast months of supply is about 3.22 with the benchmark near 341,500, one of the most balanced market areas. Northeast apartments months of supply is about 805 with the benchmark near 282,700. This is a strong buyer's leverage, widest selection and the biggest annual price adjustments. And speaking of raw houses, South Row months of supply is about 1.83 with benchmark near $392,400. This is the tightest raw pocket with capable of producing strong outcomes for well-presented listings. Southeast District months of supply is about 4.61 with the benchmark near $451,400. More selection and more negotiability for buyers. Northeast Row months of supply is 7.48 with a benchmark near 346,600. That is the softest raw condition in the city, same as apartments. Speaking of semi-detached, city center semi-detached months of supply is 3.19 with a benchmark near $942,700. Relative price resilience thanks to central amenity draw. Southeast semis months of supply about 5.25 with a benchmark near $514,200. Softer conditions that allow room to negotiate on conditions, credits and timelines. Now let's take a look at what these shifts means for October activity. There are two key forces in play. First, supply is higher across resale, new homes and rentals. Second, demand growth has cooled. Together, this rises months of supply and lower sale-to-new list ratio. The result is balanced to buyer-leaning market in several segments with the sharpest effect in apartment and rows. Detached is holding up better, but you can still feel the difference compared to the last year. And now let's talk the strategy for buyers, sellers and investors. Well, buyers, how to use this market. Apartment and row offer the most selection. Use days on the market and months of supply at the micro level to set your offer, conditions and timelines. Target buyer-leaning districts if you want negotiating power. The Northeast for apartments and row is a prime example. Detached and semi-detached are close to balanced. We will lock in your financing, pre-inspection where feasible, and structure condition timing to protect you while keeping the deal attractive to the sellers. And here's a pro tip. If a listing is approaching 2 to 3 weeks on the market in a soft pocket, we will test the price elasticity with the clean terms and smart credits. Sellers, how to win on execution? Well, price to today, not in a memory of spring. Your first 10 to 14 days must be perfect. Prep, staging, photography. The right launch price creates velocity and protects your net. Apartments and row face more competition, so plan for more due diligence. We can use more strategic incentives that preserves your headline price while addressing bias concerns. Detached sellers invest in certain south pockets can still lean on tighter conditions, but precision is everything. In Northeast and North, lead the market with price and presentation or be prepared to chase it. Investors, where are the opportunities? Underwrite conservatively. Assume longer lease-up realistic rents and adequate reserves given competition from rentals. Hunt mispriced or stale apartments and row in buyer-leaning districts. Look for easy wins, paint flooring, lighting, minor kitchen and bath to push rent and exit value. If you want steadier resale liquidity, semi-detached has held pricing best at a city level. For detached, focus on micro markets where schools, transit, and amenities anchor demand. Now everyone is asking what the outlook for October and early Q4 is. If months of supply stays near 4, expect continued modest price pressure in higher supply segments. Apartments are already showing year-over-year price adjustments over 6% and remain buyer-leaning. Detached is about 1% lower than the last year, with the most adjustments in the north and northeast, but continues to be the relative outperformer compared to higher density segments. Seasonal factors usually reduce new listing pressure later in Q4, so we will watch if inventory growth cools and whether that stabilizes pricer into year-end. Whether you're moving before year-end or planning for spring, I will build you a micro-market plan by property type, price band, and community, with exact strategies for pricing, timing, and terms in today's conditions. Message me and let's position you to win.